Let's take a closer look at the markets. Join us now with some possible picks for a portfolio. JoAnne Feeney, Advisors Capital Management Partner and Portfolio Manager. It's just sink in a nutshell, JoAnne. We need to know whether all the gains we've seen, I think 20% so far this year in the S&P, in anticipation of the rate cut cycle, does it continue, or is it one of those situations where, okay, you know, we've had a lot of anticipation of what was going to happen, and most of the gains are have already been made for the year?
Yeah, good morning, Joe. I mean, clearly there was a lot of anticipation for the rate cuts, but the rate cut cycle is just beginning. And as you know, we don't invest in the market as a whole. And so what we think is really appropriate here is to look at the individual stocks, some of which who will get a lift because of lower interest rates, but more importantly, stay focused on the earnings potential. And, you know, whether it's driven by innovation in something like AI, whether it's driven in continued builds of new houses, or the struggles the consumer faces and how that changes where they shop. All of those things create opportunities for investors as opposed to just looking at the big macro picture, which is those interest rate cuts.
When we see the long end of the curve, not, in fact, yields go up after a 50 basis point cut, what does that tell you? And does everything, the benefits of lower interest rates, is it still going to filter through the housing sector and in other areas? Because, you know, rates initially went up.
Yeah, so, you know, but look at where the 10-year rate has gone thus far, right? It's come down from its highs. And it's come down from its highs in part because the Fed was convincing in its fight against inflation. And so the long-term view of inflation came back down towards that 2%. That allowed the 10-year rate to come in. The reason why it upticked recently on the Fed rate cut is the more positive view on the health of the economy, the longer-term growth rate. Looks like it's a little bit better. And as you know, right, the long-term growth ultimately feeds into that 10-year rate. Does that help the housing market? The housing market is helped by the fact that it already has come down a fair bit, and we see that in mortgage rates. And the more important thing for housing is the fact that we still have this massive shortage after 10 years of underbuild. And that's why we favor, you know, a company like Lennar, for example, which specializes in houses for first-time home buyers or one step up, which could, you know, also see some help from the federal government, depending on which candidate wins this race.
Okay, so what do we buy? What are you recommending? And would you do it today?
Yeah, we like Lennar. It's been a long time holding in some of our portfolios. We think it still has more room to run. It's suffered recently. It's had to give some breaks on buying houses because, you know, the affordability issue on the borrowing side. So those kinds of breaks are likely to get smaller. Those discounts are likely to get smaller now as rates have gotten lower over the past 6 to 12 months. And they also are spinning off the land side of the business, so that's also likely to help their margins. So we like Lennar here, and we think it's got a lot more room to go.
What else?
Yeah, so let's look at the technology side. There's been a lot of talk about AI. One of our long-term holdings for clients in many of our strategies here at Advisors Capital is Broadcom. And the reason why we like it is for several. Obviously, it's involved in the AI play in two different ways that are really compelling. One, it co-develops with other companies and for other companies specialized chips to do run the AI models and workloads and also inference. Those specialized chips are high margin business for Broadcom. But in addition, they also do the connectivity chips. In fact, they announced just recently a new generation of connectivity, optical connectivity, which speeds up the flow of data within those data centers. And speed is everything. And bandwidth is everything. And so they've always been a leader here. And as you know, Hock Tan has done a terrific job, the CEO, of buying up companies to continue to bring in new product lines that are leaders in their industries, that have high margins. They may not be the fastest growing areas of the tech world, but they're consistently high margin with deep moats. And they've done a terrific job of acquiring, borrowing, paying down the debt, and generating massive amounts of free cash flow. So it's a long-term holding. We expect it to continue to do well in the organic growth area, but also in M&A.
All right, I still got some money. Well, you have another one?
Sure, let's go back to consumer. So there's been a lot of talk about the consumer struggling. You hear concerns about the economy. It's all about high prices, high cost of buying a house. So there are elements of the consumer at the high end of the income distribution that are just fine. They're not worried about the price of blueberries costing, going up to $7.99 a pint. But there are plenty in the mid-range of the income distribution, and certainly at the lower end, who are really struggling. And it's that mid-range that we're focused on here, because what they're doing, that kind of a household, is finding ways to trim their budgets, and they're shopping at places like a TJ Maxx, Marshalls, or at Target. These areas offer quality, but also value, and folks really also like the treasure hunting aspect of TJ Maxx. So with TJ Maxx, again, another long-term holding, you have benefits on both sides. Demand, more traffic in the stores, but also where they source goods is becoming more attractive. They get products from other stores like department stores that are having trouble selling stuff. And we've seen that softening in some of the department stores. So their inventory costs are going down and the inventory is becoming more attractive. So they get better stuff to sell at better margins, and they're getting better foot traffic. So all good for TJ Maxx and Marshalls. We like that stock, TJX.